Very good morning to all of you. So I warmly welcome you all for the Joint International Cost Conference 2024, jointly organized by the Institute of Certified Management Accountants of Sri Lanka, known as CMA Sri Lanka, and the Institute of Cost Accountants of India, the ICMAI, on the theme Cost and Effect on Industry and Services to Drive Business Performance. So now to start the conference, may I now invite the dignitaries to light up the traditional oil lamp to invoke blessings. So may I now invite the President of CMA Sri Lanka, Professor Lakshmana Vatavala, and Mr. H.M. Hinanaka Bandar, the Vice President of CMA Sri Lanka, and Mr. Heshan Kurupu, the President of Institute of Chartered Accountants of Sri Lanka, and Mr. Niraj Joshi, CMA, and Mr. Shanta Niriyalla, and Mr. Atul Ranavira, and Dr. Ashish P. Tate, and Mr. Tiro Roche, CEO and of Tibro Capital, and Professor AAC Abe Singh.
CMA Sri Lanka प्रमुख तेरी मई नवताक्षणिक දැනුමින් පිරිපුන්වලොව දිනමින් ජය කනුව කරා පිය නගන සදා කලමනා කරන ගණකාධිකාරි විශ්ව නිකේතනයයි CMA Sri Lankaவில் முதலிடம் பெறுதே அதிதொழில்நுட்பங்கள் கிடைக்கும் வென்றீர்கள் உலகத்தை வெற்றி பாதையில் தினமும் செல்வோம் முகமையாளர்களும் கணக்காளர்களும் உருவகும் மத்தியஸ்தலம் CMA, the best in Sri Lanka, adopting international standards with technological advancement, management, accounting profession globally. Recognize is full of excellence on the path to victory. තිරසර වටිනාකම් දීපනය කරමින් තිරසර වටිනාකම් දීපනය කරමින් ශක්තියෙන් ගුණෙන් අගනා ප්‍රගතිමලයෙහි දරනා විශ්වයට ඔබින පුරවැසියන් බිහි කරනා කලමනා කරන ගණකාධිකාරි විශ්ව නිකේතනයයි කලමනා කරන ගණකාධිකාරි විශ්ව නිකේතනයයි CMA.
Today's conference expertise will share their practical experience, the need for the cost records and cost accounting for achieving efficiency and productivity and removing wastage and corruption, how the Indian industry is adopting cost accounting standards for improving business performance, efficiency and effectiveness with a case study and managerial costing for business to achieve global competitiveness and societal costing to achieve affordable pricing handled by experts from both India and Sri Lanka. So, to begin the inaugural session, I would like to invite Professor Lakshmana Vatawala and Mr. Niraj Joshi CMA and Mr. Shanta Niriyalla and Mr. Atula Ranavira and Mr. Hinanaka Bandara to the stage. And also Mr. Heshan Kurupu, the President of CA Sri Lanka, also invited to the stage. So, to welcome you all, I would like to invite Professor Lakshmana Vatawala to deliver the welcome speech.
Good morning to all of you. The chairman of the Cost Accounting Standard Boards of the Institute of Cost Accountants of India, Mr. Niraj Joshi, the president of the South Asian Federation of Accountants, Mr. Heshana Kuruppu, who is also the president of the Institute of Chartered Accountants of Sri Lanka, Mr. Shanta Niriyalla, the chairman of the Consumer Affairs Authority of Sri Lanka, our other distinguished speakers, guests, our Vice President, Mr. Henlaka Bandara, ladies and gentlemen. Let me welcome you this morning to this important conference we have organized on the topic Cost and Effect on Industry and Services to Drive Business Performance. We are indeed happy that we are doing this as a joint conference with the Institute of Cost Accountants of India, with whom we had signed a memorandum of understanding to take forward the cost accounting standards. I was speaking to Mr. Niraj Joshi, and he said that they have been involved in India for over 60 years on costing, where they have been recognized by the government, and also where many of the regulatory authorities have been implementing systems of costing, cost control, and of course something that is new to our ears is the cost audit which they are doing, which I think is maybe very tightly controlled in India. So we are very happy that we were able to also to discuss with their president and to have this conference considering the great importance to our country, because today if you see the headlines of all the newspapers, it shows that we have got a very good report from the IMF of how we have been able to undertake the reform programs and to go ahead. So that's something which is very good. In addition to our discussions today, we have our President of the South Asian Federation of Accountants, Mr. Heshana Kuruppu, who's also the President of the Institute of Chartered Accountants of Sri Lanka, and I think he's supported by two other past presidents of SAFA, which I headed, and of course Mr. Hennaka Bandara headed. So this shows the real strength of Sri Lanka's accounting profession. So we really want to see how we can gain from our other members. Today we have also the presence of our delegates from Maldives, Nepal, Bangladesh, and Pakistan. So all countries in the South Asian Federation of Accountants are participating, showing the great interest that we all have in accounting matters. In Sri Lanka, as you see, we've been concentrating very heavily on the financial sector. But cost accounting is really new to Sri Lanka. It was only in 1999 we set up, but the government recognized it only in 2009. So we have to really go a long way, because especially with the IMF program, now there are many things that they are talking, especially on the fiscal area and also on inflation and very many matters. But the matters of the costing and pricing, of course, they say that that's a very key word that they have used on the pricing area, where especially for the energy industry, where they want to see cost-reflective pricing. Now that's where the costing profession has to come in, because they want to have cost-reflective pricing in order that they will not lose or break even. If you look at the cost of a product, which will be explained in our various sessions that we are having, it will include what is called the direct costs. Mainly is the material and the labor, and of course other direct overheads that are there. But if you look at some of the ways that the electricity pricing has been done, and from what I read from the Public Utilities Commission, they have maybe a total control account which includes all the costs. Unfortunately, this is a very bad principle, and we need to ensure that proper cost accounting has to be done, and where we are able to get the direct costs, and to ensure that there is no inefficiency, wastage, or corruption that goes and has to be met by the society. So society is the most important element. Even the IMF has mentioned of the poverty alleviation. At the moment, a lot of them are, the numbers going into that sector is increasing. That means the government will have to pump in more money in order to help those going into the poverty sector. So these were some of the key areas that were there. But if you look at today's conference, we are covering key areas on the cost accounting area, especially for the achieving efficiency and productivity. Now, this is really something that the IMF has brought in, and where our, maybe the politicians and others have been able to implement by putting the blame on the IMF, because sometimes they don't want to do it directly, because there may be political implications, and today IMF is there to assist them in this process. So actually the IMF coming in is helping us in the management process. So what I would also urge IMF is to look into the costing area, because if you look at energy, maybe even the fuel pricing, if you buy at 100 and sell at 80, definitely you are losing. So that's what they have done, the adjustment, that it should be a cost-reflective pricing. But in the case of the industries and others, it's much more complicated. It's not only importing it, but we have to see how effectively they are done. Because if you look at our public service, 1.6 million people who are in the public sector, it maybe some few years back, it was around 500,000, and maybe earlier even very much less. So you can see how much that has to go. And for the first time, we brought in the taxation element, because we find that this is also hitting the consumer and the effect of pricing. So where we have Mr. Atul Ranavira who will be speaking on that area. And we are also, maybe all of you are paying taxes, but supposing if we pay the taxes for education, for health, then I think we are very, very happy that the monies have been properly utilized. But unfortunately, these monies are utilized to pay the salaries of people who are not adding any value to the society. So this is a very, very unfortunate thing. I don't know how the government can overcome this situation, because still unless they put the taxpayers' money in productive areas, we will not be able to do it. So that's why this costing is very important, because we want to ensure both in the public sector and the private sector. In the private sector, to a great extent, these are being observed, because if they are losing, there is no one there to help. But in the case of government, if they are losing, if they take loans, then they will tell the public, you pay for the sins of others. So that's a very unfortunate thing, that we are all there in the receiving end, so we need to have professional management. I'm also indeed very happy that Mr. Shanta Nirayalla, who is the chairman of the Consumer Affairs Authority, is present, because he has to ensure that the correct pricing has to be done, and also that the consumers get the products at an affordable price. So I think this conference will certainly help him, and also he's also got some of his directors who are present here, because that will help in the costing standards that we can implement. Then we will know that the pricing is done in the proper way. Because in many cases we know that they get hold of some good accountants and they prepare a very fantastic report to be submitted to the Consumer Affairs Authority. So in that respect, the Consumer Affairs Authority must ask for the cost records. Come with your books and cost records, then we can see what has happened. Unfortunately, in Sri Lanka, these cost records are not maintained. If you are the electricity board, whether they maintain cost records, whether they can give the cost of generation of each of the plants, I do not think that they are in a position to do. So the Public Utilities Commission has to be very strong, the regulatory authority. I think they can take a lesson from India. I'm sure Mr. Niraj Joshi will be able to tell you. Mr. Tate is here with us. He will also be able to tell. how strict controls they are having. IMF is the one organization that has told that they talk of implementation. They say the main success of any program will be implementation. And private sector has been doing it extremely well. All the foreign exchange earned for this country is coming from the private sector. The 200 garment factories programs, the other exporters who are there, they are all bringing in the foreign exchange. So we are doing a very great job, but then how are we going to pass this on to the public sector is the question that we have. So the costing would be one area that we should now look at. And I'm also very happy that the president of the South Asian Federation of Accountants is there, because there we have a mix of the chartered and the management accounting bodies and the cost bodies. So that will also give an overall picture as to the role that SAFA can play in this regard. So let me once again thank everyone, because I must also thank all those who are present, because sometimes when you speak about costing, a lot of them are not interested. But today I can see that many of you are present here. You know the importance of costing. And today you have come to listen to the eminent speakers who are there. And definitely, if you implement these in your institutions, it will give you a lot of maybe a breathing space where you can cut down your costs and also increase your profits. So let me once again wish this conference all the best. And I must thank everyone for the support that they have given us, and that we will be able to take this forward and benefit not only the institutions, but also the country as a whole. Thank you.
Thank you, Professor Vatawala. And now, I'd like to invite Mr. Heshan Kurupu, the President of Institute of Chartered Accountants of Sri Lanka, and also the President of South Asian Federation of Accountants, SAFA, to deliver his special speech.
Professor Lakshmana Vatawala, President CMA Sri Lanka, Vice President Mr. Hennayaka Bandara, members of the Council, Mr. Shantani Riyalla, Chairman Consumer Affairs Authority, other distinguished invitees, ladies and gentlemen. On behalf of SAFA and CA Sri Lanka, I would like to extend warm congratulations to CMA Sri Lanka for organizing today's joint international cost conference. For the benefit of some of the participants, let me briefly explain and talk about SAFA and the role of SAFA. The South Asian Federation of Accountants is a network partner of International Federation of Accountants, comprising 11 accountancy bodies in South Asian region, namely India, Pakistan, Bangladesh, Sri Lanka, Nepal, Maldives, and Afghanistan. Bhutan, where no accountancy body exists, has been given observer status. SAFA has undertaken the leadership role in providing new direction to the accountancy profession with the region, with over 475,000 members affiliated with its member bodies. SAFA, as a forum of professional accounting bodies, is committed to positioning, maintaining, and developing the accountancy profession in the South Asian SAARC region, ensuring its continued eminence in the world of accountancy, in the public interest, and towards broad economic development in the region. So today's joint international conference by CMA Sri Lanka and the Institute of Cost Accountants India is a testament to the collaborative approach adopted by SAFA in uplifting the accountancy profession in region. It is heartening to see many professionals from regional countries such as India, Pakistan, Bangladesh sharing their experience in addition to Sri Lanka. I would like to mention here, SAFA is reaching its 40th anniversary, and happy to see one of the founding member, Professor Lakshmana Vatawala, who was instrumental in forming SAFA, is hosting this today. Thank you, Professor, for those initiatives and visionary thinking way back 4 decades ago. And one of the past president, I would like to recognize Mr. Hennayaka Bandara as well. So while the country has observed some level of recovery after the economic crisis, it has not translated into a relief for the major segment of the population, and we are aware. The cost of living compared to 2022 remains high, although inflation has stabilized. Consequently, there is a drop in disposable income. We know when there is a drop in disposable income, naturally that leads to reduction in demand for goods and services. Impacting businesses in this context, the natural choice for business is to look for internal improvements since sales growth is very minimal. However, most businesses tend to opt for a cost-cutting strategy rather than focusing on cost optimization and efficiency drive. So we have seen now interest rates coming down compared to 7 or 8 months back. Prime lending rate has come down by almost 6 to 7%. There are signs of credit growth, but I don't think we have seen demand picking up, and businesses, and I'm from the industry, we have seen it. There was a slight increase, but still with some of these tax changes, we don't know what will unfold during next quarter. So in this context, as I mentioned, the consumer will either move towards inferior or second quality products, or they will cut down their demand, and there is a pressure on businesses to sustain their performance. So how are they normally trying to do is cutting cost and not looking at future business models. So while cost cutting may lead to immediate saving, it can also have a negative consequence. Whereas cost optimization aims to improve overall business performance by ensuring that resources are utilized effectively, leading to a sustainable cost savings and increased competitiveness. So Professor talked about public sector. Since I am coming from private sector, I think it's important that we address some of these issues in private sector as well, because I don't know to what extent private sector, especially small and medium enterprises, adapting some of these tools in their pricing decisions. The latter approach, that is cost optimization, requires dedicated efforts including detailed waste analysis, value stream mapping, and the use of scientific tools and lean practices to make data-driven decisions. In this context, finance professionals have a crucial role to play. As business partners, we know that finance is playing a very crucial role, and then we all pitch finance professionals as business partners, but for us to play that role, I think we have to move away from our primary roles of value reporting and value preserving to value adding. I think that's the role I believe we are going to highlight today as well. So not becoming mere value reporter and value preserver, but to become a real value creator. I'm confident that today's deliberations will add value and insight into efficiency improvements and better utilization of resources by businesses, ensuring true meaning of sustainability. I wish all the participants a great conference and fruitful knowledge dissemination. Thank you very much.
Thank you, Mr. Kurupu. And next, to discuss the need for cost records and cost accounting for achieving efficiency and productivity and removing wastage and corruption, I would like to invite Mr. Niraj Joshi, CMA, who is the chairman of the Cost Accounting Standards Board and the member of the Council and Council of the Institute of Cost Accountants of India, and also a partner, Dhananjay V. Joshi and Associates. I invite Mr. Niraj Joshi now.
Good morning all. I am CMA Niraj Joshi, Central Council member of the Institute of Cost Accountants of India. Dignitaries on the dais and off the dais, I am very much thankful to the Institute of Certified Management Accountants of Sri Lanka for giving me an opportunity to share my knowledge and experience with you, particularly in the domain of costing, cost accounting. I will not be indulging into deliberation on cost audit per se, because mechanism is still very new, or rather we are in the process of setting up that kind of a mechanism in Sri Lanka. So I will be focusing more on what are cost records, or what is the importance of costing, or what kind of value that can be added by analyzing a costing or setting up of costing systems, not only from the industry perspective, but also from the government perspective. So that would be the focus of my deliberation today. So the overall theme for the session is need for cost records and cost accounting for achieving efficiency and productivity and removing wastage and corruption. So flow of my presentation would be briefly explaining you about the mechanism of costing in India. Then give you a brief background on what is meant by cost records, because when we talk about that there has to be cost records, there are certain specific things that are very essential for any costing system or any mechanism to establish cost records. Then who are the key stakeholders? So there are multiple stakeholders that we identify in India with this mechanism. But the two predominant stakeholders would be government and the industry. The other stakeholders' value addition would depend on the decisions that these two stakeholders make. And then value addition through cost records. And what are the critical use of cost records for regulators? Because what has been our experience in India is that till the time maybe the country or maybe the industry is making profit, nobody really looks at cost. Then you always say that it's a market-driven economy, so whatever is the price, we'll sell at that and then we make profit. But when the things are not going good, that's where the importance of costing comes in. And maybe in majority of the private sectors, then the things are not that good. So getting a costing system set up when the things are not looking good becomes very challenging, particularly in Indian context, considering the sizes of the businesses. But if you are doing that, that really helps the management to focus their efforts or focus the resource allocation to the profit-making products or to the profit-making activities. And that's where the role of costing shall come in, not only for industry, also for the government, so that government knows where exactly to spend money on, considering the entire economy or the contributors to the GDP, where there shall be subsidy, where there shall be incentives, so that cost can be controlled in that sector, and then the profitability would really come to the people or to the industry. So as Professor Lakshman Vatawala sir said, that we have a costing mechanism which is very, very deep-rooted in our economy now. Our institute was established in the year 1959, and 6 years down the line, the mechanism of cost audit started. So we have been into cost audit mechanism over now 6 decades, and there has been transition in the way we report or the way we maintain the record, the way we present it to the government. The existing format of reporting to the government is through XBRL mode, what we call it. So it's a completely IT-driven process. So whatever data is accumulated at the government end, they can easily assimilate it, easily analyze it using the computer technology. So that's how the costing mechanism in India currently works. We have two different sets of compliances. One, what we call is that maintenance of cost record, where a large section of companies are required to maintain cost records. And then there is cost audit for the bigger companies. So in Indian terms, the maintenance of cost records starts at 35 crore rupees. Correct? So if a turnover of a company is around 35 crores or more, the cost record maintenance would start. And the audit would come above 100 crores turnover. So that is the distinction in record maintenance and cost audit as far as the Indian scenario goes. Then there has been an important amendment in the Indian Companies Act in the year 2013, where the definition of accounting records got amended to include cost records in that. So now when a company says under the Companies Act that I have maintained my accounts or I have good accounting record, then it is in turn saying that I also have cost records maintained in the company. So that was a small amendment, but it made a lot of impact as far as the need for maintaining of cost record within the company. As I explained, provisions for maintenance of cost record and cost audit are there, which are distinct. Then we have very specific act, that's the Companies Act has a very specific provision that defines what is meant by cost records, and it is then complemented by the cost accounting standards that the institute has come out with and generally accepted cost accounting principles. So the cost accounting standards is an evolutionary kind of a mechanism. CMA Dr. Ashish Thatte would take you through the cost accounting standards, but we have till date around 24 cost accounting standards, and we keep on adding the standards as per the need of the industry or as per the need that we feel to follow the best global practices. If any item of cost is not covered under the cost accounting standards, then we have compiled a set of rules that we call as generally accepted cost accounting principles. So if the cost accounting standard is silent on some points, then you go back to those principles, and that is how you compile the cost records or the cost statements. So in India, what we believe is that these standards are not only for those companies for which the audit is mandated, but they shall be used by every company for any cost sheet or cost statement that they compile. So we have, if you come to India, our membership breakup is that only maybe 20% people are in practice of our institute, 80% are definitely in service. So whenever they are working in their organizations, they are following the cost accounting standards for compilation of cost statement, whether it is for internal reporting, whether it is for their own decision making, or submitting to, say, banks or financiers. So the mechanism has been widely spread and accepted. So it gives a standardized kind of a system to compilation of cost statements. So that is the advantage of it. So currently we have applicability of cost audit specifically based on the industry segment. So government has identified certain industries where they feel that it is necessary to have cost audit mandated or compliance with the cost records to be checked and submitted to the government. In India, the system is based on HSN codes. So they have identified industry like petroleum or telecommunication, healthcare, education, power, chemicals, pharma. So there are a lot of industries. Maybe by our estimation, they cover around 38 to 39 different industries where currently the cost audit is mandated. So coming to what is meant by cost records. So the first and foremost part of cost records is your quantity accounting, quantity record. As far as Indian scenario goes, the costing remains the only mechanism in India that gives authenticated quantity information to the government and also to the management. There will be internal record or MIS that goes to the management, but the entire quantity record authenticated by a third-party agency comes only as part of the maintenance of cost record or cost audit for that matter. Because in financial accounts, in Indian context, we don't give quantity details. There are value details. We only give opening, closing stock quantities. But the breakup of it, the breakup at, say, unit level, item level is not available. That is available only through cost records, and that makes a huge difference, not only for the companies but also for the government. So for example, if the country needs to know that how much is the production of, said about electricity. So what is the total generation of electricity? Not only considering the power generation plants, but in India there is a system that every company would have their own DG sets, correct? So they have backup DG sets. So they can run the backup DG set, and if the power gets generated, they supply it to the grid. For that they receive money. So, or if you are generating, say, using unconventional sources like solar or windmill, there are private players or the individual companies who have set up windmills and solar plants for their captive consumption. But if there is an excess generation, it goes to the grid and then government pays them with a fixed rate. So what is the total generation of electricity, if anybody wants to know in terms of quantity, then the quantity record has to reach to the government. And then this is the only mechanism which is actually collecting quantity information on production as well as sale, as well as opening stock, closing stock, and giving a reconciliation of it. That's the cost records, that's the use. Now electricity, though controlled by majorly by under the PSUs, so government has alternate mechanism to collect the information also. But if I say a purely, let's say, privatized industry like pharma in India, so if I want to know that is what is the production of a particular drug in India, that information will be available with the government through this mechanism now. So they really, this helped us a lot during COVID time, correct? So government had the information on cost of production. Dolo 650 was a particular drug that was prescribed very heavily during the COVID time. In alternate to say crocin or combiflam that we have. So Dolo 650 became something like thing to buy, and so the prices started shooting up. Then government went into the detail, they took out the cost sheets because the Dolo 650 was in the market since long. It was not a new drug that got invented. It only became popular because doctors started prescribing it. So government really went into the details and also found out that the company was paying to the doctors to prescribe the drug, because they said that your cost has not gone up, why your price is going up. Dolo 650 was really getting sold at very high price. Then government put a cap on the pricing for that specific drug, and then they took action against the company for paying doctors to prescribe the drug also. Correct? So that is the use that government can make only if they have data. Now this could be done because pharmaceutical industry is covered under cost audit for last 40 odd years. So they have the history of last 40 years cost and price trend for every drug that gets manufactured in India. So these can be the usage, or this can be the usage that government can make. The other critical component of cost record is setting up a system that is driven by cost object, both for expenses and revenue booking. So when I say that I need to establish a system of cost records in any organization, I really have to think that what are my cost drivers. So it goes into the domain of activity-based costing also. But activity-based costing is a very threadbare analysis of any activity or cost. When we in India compiling cost records for a generic purpose, we don't actually go into the nitty-gritties of activity-based costing. But on overall level, we identify which are the major cost centers or which are the major cost drivers, and for that, the cost is getting collected. And parallelly, the revenue also needs to be tracked for that particular object where you want to report the cost. So for example, if I'm talking about, say, education industry is covered under maintenance of cost records in India. So then maybe the cost object where I want to calculate the cost would be per hour cost of using a particular classroom, because that is where the management will also be interested to know that if I'm using this particular classroom, what is the running cost of that classroom, or per hour or say per student cost of a course, because there are so much variety of courses that are offered. Say if you go to a medical college, it will be a 5 years course. If you go to engineering college, it's a 4-year course. If you go to things like IIMs, they have so many variety of courses. So for each course, what is the per student cost? Now that would be the cost object. So I need to track parallelly what is my revenue. And then only government can identify whether there is a profiteering going on, because education is one sector which affects every common man in the country. That is the intention of government to have this kind of a mechanism in place. In fact, all the state governments have a separate group set up to approve the cost of education in that state, and cost accountants are nominated on those boards in all the states. So any college, if they want to increase the fee, it's called as fee fixation commission in the education sector. If they want to increase the fee, they have to submit a proposal to the government or that committee. Then the committee will evaluate whether that fee is justified based on the cost of education that they have. And then the fee is approved, or the fee increase is approved, or the government will reject and say that you need to reduce the fee. Because typically in India, what happens that though there is no direct money that is given to the private colleges, but many of the times lands are given free of cost or at very, very subsidized rates, or the electricity is provided at subsidized rates to the colleges. So if I consider a hypothetical cost of that land also in my costing, then for management or for the government particularly, that's not good, because government has given you, say, a land in Pune today runs at a rate of maybe 20,000 rupees per square feet. So if they have 1 acre of land, the cost of land would run into hundreds of crores. Now that land they have got for free. Now what we observed as our institute has done a lot of work in this domain with the government, that colleges were including cost of land when they have not actually paid it, or say depreciation of the things which they are getting free, or power which they are getting free, they were including it as a managerial costing method and then presenting it to the government saying that this is our cost. So that is where we could advise the government that you need to remove all the elements of subsidy and grant from the costing when you are going to measure the cost of a particular service. Then functional allocation is another concept that is unique to maintenance of cost record. In financial account, we only track the total expense. To give a very brief example, I think Ashish will go into much more detail about it. To give an idea that if I say employee cost, then your financial accounts will only report what is my manpower cost in your P&L or balance sheet. The costing, that is not sufficient. I need to classify what is my employee cost into different functions. That what is my direct employee cost, what is my indirect employee cost, what is my employee cost allocable to repairs and maintenance, what is the employee cost allocable to research and development activity, what is the employee cost that is allocable to the sales and distribution or marketing activity. So the same cost element is bifurcated into multiple components. That's what we called as functional allocation. And then for each of this cost element, on what basis it is to be allocated, because at some place you can measure it directly. In terms of employees, you can measure directly that 10 employees are working on production, say 2 employees are working in marketing, so it can be bifurcated. But there are some places where it cannot be measured directly. Then the cost accounting standards, which Ashish will deal with. Cost accounting standards give you the basis, the scientific basis on how you can allocate it. And that is how the cost records ultimately get compiled. So it is not just a vertical representation of the financials, but a lot of work goes into identifying cost of every function, the total cost of every function. So as I was giving an example of, say, power generation by the company, correct? So if I go to a company and ask them that what is your power cost, then it is not only the electricity that they are buying from the government, it will also include the electricity that they are generating. So if they have a DG set put up with them, then the depreciation of DG set, the fuel consumption for DG set, the manpower, the repairs, maintenance, the insurance, this all cost gets collected under a head called as self-power generation. That is what the functional allocation gives. And then the management really knows that what is the power consumption that I am looking at, or what is the cost of power in total. So if I want to control, then I need to understand first what is the cost. So that is where the functional allocation comes in. So functional allocation is a very, very integral part of cost records. And this is where the differentiation between maybe the financial record and cost record starts. That in finance we are looking at the overall picture. In costing we are looking at more of a micro level analysis. Cost statements, of course, in India it is mandated to have unit level, item level cost statements prepared. Correct. So when I say unit, so in India particularly or in any country, there would be one company which has 10 different manufacturing setups. Under each manufacturing setup, there will be hundreds of products that get manufactured. Maybe the same product is manufactured at 3 different locations, or different products are getting manufactured at different locations. Now in India, it is mandated to have a cost sheet prepared for every unit and every item separately. Correct? So if I have 3 plants, for each 3 plants there should be separate cost statement for every item that gets manufactured. So that is the kind of exercise that happens in India. And this has been happening for last 60 years, and that is where the importance of costing has got deep rooted. So now the management is also aware, even if there is no cost audit in a particular sector, they still do costing following all these principles, because they know that these are the principles on which the costing has to be performed. And that's where the role of the cost accountants in India has come into play, because we have so many members in industries. So they advise management that if you are going to do costing, you have to follow this set of principles. Even if it is not mandated, you have to do it generally so that the system becomes standardized, and then there is a inter-plant or inter-unit or year-on-year comparison, similar to the accounting standards that we follow. Profit reconciliation statement is the ultimate gist of measuring accuracy of your cost records. So it is basically reconciliation of profit as per cost records and profit as per financial accounts, because there cannot be a different figure that you are considering for costing. So when I'm talking about the cost records and this mechanism, we are not dwelling into the mechanism or the concept of managerial costing. This is pure and simple costing in its most scientific form. So I don't add any notional cost, correct? That is not allowed under the mechanism. So I cannot add hypothetical cost, notional cost, replacement cost. That is not allowed. Whatever is there in your books, that is your actual cost, or that is your actual expense for that particular year. Now based on that, you compute your costing. And there always will be some fundamental or principal differences in financial accounts and cost accounts. A very basic example is, say, donations. In India, there is a system of giving donations. Everybody will be there. And in income tax, there are benefits that you get under the taxation. So companies do give donations. Now, the donation part is not considered as cost as per costing principles in India. So donation becomes a non-cost item. So though the profit as per financial records will consider donation as an expense, the profit as per cost records will not consider that as an expense. So it becomes a reconciliation item. So like this, there is a list of items which are considered as reconciliation items, or say bad debt provisions, or even foreign exchange gain loss. So the concept of costing in India, particularly for reporting to the government, works on the logic that it should focus on getting a normalized cost on year-on-year basis, so that there is a comparability of cost. And it has to be an operational decision, not a financial decision. Many times, the foreign exchange gain loss is out of a financial decision, because you do lot of purchases of material, particularly in India, depending upon the price or depending upon the dollar rate. So I may not require that kind of a material right now, but still I buy it, because currently the dollar rate I feel is advantageous, and then I have taken a back-to-back hedge. But all these costs, all these decisions are more of financial driven decisions, not the operational decision. There is a distinction between what is operational and what is financial as far as the costing principle goes. So for operation, I required X amount of material. Now buying Y amount of material was a financial decision and not the operational decision. That is where we segregate these items of expenses as non-operational items, so that my costing remains constant over the year, and then only the decision based on cost can be done. So that is the profit reconciliation statement, which is also very critical. Then we have other value addition statements as part of our reporting mechanism, like value addition, ratio analysis, something called as a performance appraisal report. I will not go into the details of it, and ultimately the cost sheet. So what I would like to do is show you a sample or a blank format of cost sheet that we use in India. So this is what we call as an average cost statement. Now what gets submitted to the government in India is for company as a whole. I said that our mechanism has evolved a lot over the past 60 years. So when we are submitting it to the government, we are submitting for company as a whole for an 8-digit HSN code. But when the records are getting compiled in the company, they are at item level. So this is the information that goes into a cost sheet. So it is not simply reproduction of your financial, because financials would be a different way to representing. This is what the cost sheet is. So what I am reporting actually is breakup of material consumption, then separately for process material and chemicals, how much utility is getting consumed. And this is not only the quantity, we report quantity, rate and value. And that's the unique feature of a costing exercise, that costing doesn't only report value, it reports quantity, rate and value. And rate is where the actual focus of the management has to be, because there can be very less change in the value in overall figure terms. But if your quantitative information has varied a lot, your rate will vary a lot. So practically we find that, say, your opening stock is, the change in inventory would be very nominal. So the company would say that, okay, the change in inventory is nominal, so there is no problem. But if you compare the quantity reconciliation that I talked about, if I find that my opening stock rate was 100, my closing stock rate was 200, then it is necessarily meaning that your production rate or cost of production should have been above 200. Then only the average would come to 200. But if my cost of production then comes to, say, 150, then it necessarily means that you have overvalued your closing stock. Correct? If my opening stock is 100, cost of production 150, then average would always be your closing stock value, which has to be between 100 and 150. If it goes beyond 150, it definitely means that your stock valuation is overstated. And in India, we have observed that the stock valuation is a figure which is managed by the, unfortunately, our peers and the company for the benefit in the taxation. Correct? So that is the figure that is manipulated figure, I should say. And that is why very recently the government has introduced a special certification under the Income Tax Act. The valuation of stock, it is given only to the cost accountants now. So government has come out with a special provision in Income Tax Act in India, which says that if there is a assessment or if there is an inquiry that goes into your income tax, then the stock will be certified or stock value will be certified by a cost accountant, because it involves so much of costing. And that is where the role of cost accountants is also getting highlighted in taxation domain, which was never been our core domain of practice. It was always with the chartered accountants. Then we have direct employee cost, direct expenses, consumables and stores, separately reporting for repairs, maintenance, quality control and research and development. That happens in Indian cost sheet, because there are so many benefits or so many schemes that government keeps on launching in terms of promoting the research and development activity or control on your, or say giving benefit for quality control expenses or pollution control also. Nowadays, sustainability, environment is a critical issue. So we are also reporting separately on what is your pollution control cost. There is a separate standard for it. So this is how the overall cost sheet is. So it's not a very simple kind of a representation. It really requires some kind of working and getting that kind of a detailed knowledge on part of the cost accountants and then implementing it. But the benefits are also that much. So we specifically classify it into cost of production, then going to what is my cost of sales. So two separate compartments are reported. Right. So going back to our presentation. So these were mainly the cost records that were there. Correct. So this is just a list of key stakeholders that at least we consider in India are our stakeholders. The industry, investors, government, indirect tax, direct tax authorities, stock exchanges, regulators and consumers. I will, considering the time constraint, I would go to a very quickly 2 slides which talk about how this mechanism can be used, right? So I will concentrate more on specific use by regulators and industry, correct? So national average cost and profit is highly used for anti-dumping. Now in India, we have a serious issue of dumping of goods by China specifically, because the cost of manufacturing China is very low. So our Indian industry needs protection. So if there is an anti-dumping case to be fought by any government in international court, the critical information that the government has to submit is the national average of cost of production for that industry. And that is where the role of costing has come in. Our industry, particularly the steel industry, the heavy machinery manufacturing industry, they have successfully fought the anti-dumping cases over the years and have been successful in imposing anti-dumping duty on specifically Chinese imports. So from government perspective and also from industry perspective, because the industry association first has to go and report to the government saying that there is a dumping happening. And that can be proved only if you prove that your cost of production is lower than the cost at which the things are getting imported. Correct? So that is where the use of the costing information very specifically for the government. Then price fixation. Government in India we have lot many regulators. So though we call that we have absolute open market, that is not true. There are so many regulators working in specific sectors like petroleum, telecommunication, then power, pharma. We have a DPCO that's called as Drug Price Control Order. So there are specific drugs that are controlled by, the price is controlled by the government, and all these regulators are operating at cost plus level. Correct? So they collect the information through this mechanism. So they have a costing system, costing information with them. And they have said then that the companies will only get this much percentage of profit on the cost. It is not an open market. Correct? So they tell you that you will get, say, 10% return. That is the average return that you should earn because you are into utility providing or you are into a sector that is very sensitive for the common man. So price control is very much there in dedicated sectors, and that is where I think it can be used by the Sri Lankan government as well. Then understanding the usage of natural resources is one thing where the costing also helps. Subsidy and grants, as I rightly said, that when the cost sheet is presented to the government or when the government has information on the cost sheet, they can understand that in a particular sector or in a particular industry where the cost overrun is there or where the cost is the factor which is affecting the pricing. So if they find out that in a steel industry, if you come to India, steel is a major manufacturing sector which consumes a lot of power. So if I find that my steel prices are going up, then the government can decide to give subsidy for power consumption for steel plants just to control the prices. Or if I want to promote a particular sector, now Government of India has launched many PLI schemes, that's production linked incentive schemes. Now how the government would decide that which sector shall have this scheme? For that they shall know that which sector my production as a country is lower and where I want to really boost my production up. So the government has now data of what is being imported and what is the Indian domestic production. And then the production linked incentive schemes are given. And now they have mandated that if you are taking money out of production linked incentive schemes, you have to submit a specific cost statement to the government justifying that the scheme has helped you reduce the cost. The scheme has helped increase the production within India. So these are some of the usages. Since your regulator is represented here, sir, in India there is a competition commission like the consumer protection. Yeah. So the competition commission makes huge usage of this entire data, basically the costing data, to find out where there is profiteering going on, and then they take suo motu action on the companies by way of imposing some kind of penalties to stop the profiteering. So these were some of the issues that I wanted to highlight to the August gathering here, that how the cost records can be used or can be beneficial not only to the industry but also to the government, and ultimately if they both use it, it will be for the benefit of the common man or every citizen of the country. I think considering the current time availability, I would restrict myself here, and maybe we can have some another opportunity where we can have a longer duration session on the more nitty-gritties and other parts of the cost records. I thank you all for your patient hearing and giving me this opportunity. Thank you.
Thank you, Mr. Joshi. And now I invite Mr. Shanta Kirialla, the Chairman of the Consumer Affairs Authority, to deliver his speech.
Good morning to you all. Professor Lashmanar Watawala, the President of CMA Sri Lanka, Mr. Heshan Kuruppu, President CA Sri Lanka and President South Asian Federation of Accountants, Mr. Niraj Joshi, the Chairman Cost Accounting Standing Board and member of Council Institute of Cost Accountants of India, and Mr. Atul Ranavira, Managing Partner, Ranavira Associates, Mr. Hen Nayaka Bandara, Vice President, CMA Sri Lanka. I must thankful to Professor Lashmanar Watawala for inviting me for this important forum to deliver speech today. As Chairman of Consumer Affairs Authority of Sri Lanka, the costing factor is involved each and everyday activities of our institution, which is responsible government agency. I think the knowledge gained by participating to this conference may be much importance to the directors who are here today representing Consumer Affairs Authority while delivering their discharging their day-to-day activities to the consumers. May I be permitted to deliver my speech. In history, Ceylon was self-sufficient. Advent into the country by Portuguese, the Dutch, and finally the British created a dependent economy which is considered to be the turning point. A price control system was introduced to the country under defense regulation in 1939 to guarantee minimum supplies to the consumer. Later, in 1950, the system was permanently incorporated into the law of the country. The Department of Internal Trade was the sole authority to administer the following acts and ordinances: Control of Price Act of 1950, Weights and Measures Ordinance of 1956. The National Prices Commission administered the National Prices Commission Law number 42 of 1975. With the introduction of open market policy of the government, the protection of consumers was vested in two statutes. The Consumer Protection Act number 1 of 1979, the Fair Trading Commission Act number 1 of 1987. The Fair Trading Commission Act number 1 of 1987 was introduced by the repeal of the National Prices Commission Act of 1975. As the name implies, this was created basically to look after the competition policy and the national pricing policy, and is being administered by the Fair Trading Commission. In 2003, these two were amalgamated to the present CA Act number 9 of 2003. And the Consumer Affairs Authority and Consumer Affairs Council was established. The present Act, government invention to the market by way of pricing, ceiling, and monitoring through the provisions of Section 14, 18, 19, and 20. The price control proposed as a solution in an effort to present prevent businesses from taking advantage of consumers. While this may seem like a simple solution, price controls often result in negative economic consequences, particularly given the current economic climate. In emerging markets and developing economies, price controls are frequently implemented in order to achieve social and economic goals. These controls may be part of government initiatives to safeguard vulnerable consumers by addressing market failures or subsidizing the cost of essential goods. Various regions have implemented price controls based on different economic conditions and the nature of products and services. Basic utilities like electricity, water, telecommunication, and postal services are the most common goods and services subject to price controls in advanced economies. In contrast, emerging markets and developing economies typically apply price controls to most vulnerable products and services, liquefied petroleum gas, and food products, including flour, sugar, and rice, etc., and some medical services. In accordance with Section 19 of the CA Act, the CA has the authority to control prices of goods and services that are deemed essential to the community. We must determine the prices in a way that safeguard consumer interests and ensure industry sustainability. The company's sustainability is guaranteed by product pricing and cash inflow. Therefore, pricing and costing become our most important considerations when deciding on the prices of goods and services. If businesses are operating efficiently, then pricing decisions become meaningful to the consumers. Consumers must bear the cost of an inefficient business or industry if it is unproductive. In order to identify variations in the products and processes, increase productivity and thereby lower costs, and boost efficiency levels, which in turn affect cash flow, sustainability, reinvestment, expansion, and helping the nation achieve its common goal. Cost accounting and management accounting are therefore crucial for businesses. With regard to the authority, we have chosen products that are necessary for community or part thereof, to make sure there is no market manipulation or imperfection, or that such products are not being sold for an unreasonable and excessive price. In our daily activities, cost accounting is really important to ensure the consumers are protected. Meantime, each supply chain participant receives a sufficient margin. Our cost accounting method is designed in such a way that the cost structure takes into account all supply chain activities in order to balance consumer and trade interests. We work to ensure that businesses are able to remain in the market and continue to supply goods while also protecting consumers. Using efficient cost accounting, we keep an eye on market prices of essential goods and make necessary market interventions. As and when required, cost accounting is therefore important to regulate the prices of essential commodities, controlled items. Thank you.
Thank you, Mr. Niriyala. And now, to discuss the impact of value-added tax, VAT, the costing and pricing of goods and services, now I invite Mr. Atula Ranavira, the Managing Director of Ranavira Associates, the Chartered Accountants and Managing Director Ascent Advisory Partners Private Limited.
Good morning, everybody. I'll try my best to manage the time, limit the time, because we are almost 25 minutes behind the schedule. Right. Now, we are talking about the cost management, cost recording, cost standards. Yes. Nowadays, not only in Asian countries, but also in the world, managing of cost is one of the most important things, because the cost is escalating every day. Now, we'll discuss about the VAT, the implication of VAT to the costing and pricing of products and the services in Sri Lanka. Now, I have extracted these figures 100% from the recent budget speech, 2024 budget speech of the government. When we see these figures, I don't have much time to explain everything, but now out of the total revenue of the government, 93% we are expecting from various taxes. Mainly 54% indirect taxes, sales-based taxes, and 26% income taxes. It's huge. Now, when we total up these two itself, almost 80% taxes. Who bears this tax? Who is born in the tax? The consumers or the people in the country. Now, therefore, now the situation is there's a huge impact to the cost of living, and as a result, a lot of us are discussing about the managing of cost. Now we'll move forward to manage the time. Right. Now recently what has happened in Sri Lanka? Now recently, VAT law has amended very recently with effect from 1st January 2024. There are two main amendments. One is that they removed most of the VAT exemptions, almost about 65% of the VAT exemption schedule, they cut down almost about 65% of the exemptions. In a way, for a strengthened VAT system, that's a must. No doubt about that. More exemptions mean the VAT system won't run properly. Therefore, there shouldn't be exemptions to have a proper VAT system. But at the same time, we have to think about the general public. Therefore, we have to have some VAT exemptions. Now, that is one amendment. Then the second amendment, main amendment is VAT rate, they increase from 15% to 18%. Now, this 3% increase is also affecting to the cost of living heavily, because VAT, what is VAT? VAT is a domestic consumption tax. It is paid by the ultimate consumer. VAT is not a problem for the in-between business people in the net, because you can pass on the VAT component to the next person, so on. Ultimately, the ultimate consumer is bearing the cost. Right. But in the case of VAT, there's one speciality. The cascaded effect is not there, because we are giving the input credit for the previous VAT what we have paid. Therefore, generally, the effect is that 18%, but due to in this net chain, there may be some people who are not registered for VAT. As a result, the final effect to the consumer may be little greater than 18%. If there aren't any exemptions, if everybody are registered for VAT, the effect to the consumer is 18%. But in Sri Lanka, due to a lot of people are not registered for VAT, who need to register for VAT, at the same time, we have a fairly big VAT, the heavy VAT registration threshold, very high VAT registration threshold. Some time back, we had only 12 million per year, then increased to 300 million per year. Again, they reduced it to 80 million per year. The VAT threshold for registration, 80 million. Then, now they are proposing to reduce it to 60 million a year. In tax angle, I think that should come down to about 10-12 million. Otherwise, this system won't work properly. That is in the tax angle, not in the cost angle of the general public, right? Anyway, then luckily, they proposed to remove the suspended VAT system, subsequently changed the name to simplified VAT. I don't know whether it is simplified or not. Anyway, suspended, the technical term is suspended VAT. They wanted to remove the suspended VAT due to two reasons, mainly the administration issues. These administration issues mainly by the tax administrator of the Sri Lanka and even the taxpayers. Now, due to that, they wanted to remove the SVAT. But luckily, that didn't happen because we couldn't find a better solution than SVAT. That is what has happened. I think we better continue with SVAT and sort out the administration issues. Right. Then, as I mentioned, there's a bill to reduce the VAT registration threshold up to 60 million. That's a good proposal. Anyway, still that amount is too big. Right. Now, this is a list of new VAT exemption. I'm not going to read this list. I just included this list because foreign delegates are also here. Because of that, I thought of including that VAT exemption list into this my note. Right, I have categorized this into industry or sector-wise, for which sector it is affecting. Now, basically, when we go through this exemption list, very essential food items, essential medicine, and essential few services are exempted. In addition to that, mainly education is exempted, continue to be exempted. Right. Then, in the case of fertilizer, I'll highlight only few. In the case of fertilizer, earlier, the all chemical fertilizer and organic fertilizer, everything were exempted. Now, only the bio-fertilizer, that means only very few. Something to do with human and animal. Human and animal waste-based fertilizer is exempted, right? Then, in the case of agriculture sector, unprocessed agricultural produce, unprocessed agricultural produce is exempted, but no sooner you do some produce, then it is liable to tax. However, in the case of agriculture, they have removed the poultry industry. Poultry industry is liable to tax, VAT. But agriculture, including fisheries, and dairy is continued to be exempted, but the primary product. I'm not going to read everything. I'll move forward to manage the time. Right. Now I'll come to the discussion, the main section, the major impact. Now we are talking about the cost. Everybody are talking about the cost. Now when we are costing a product, taxes give a major effect to the cost. Therefore, now with these recent changes and the current system in operation, we will see few sectors which has badly affected. Power sector. Sri Lanka, we are depending almost about 30 to 40% on thermal. Little more than 30% on thermal power. We have a lot of renewable energy, water resources, solar, wind. But still, we are depending more than 30% on thermal power. Luckily, during last 5 months, we had a heavy rain. As a result, these days we are using very little thermal power. But in future, again, we will move back to thermal power. Now, all these renewable energy sources, items were exempted from VAT. But unfortunately, this time they made those things liable for VAT. As in the tax angle, and a citizen of the country, I'm not much agreeable with that proposal, because ultimately what will happen? Now when they put 18% VAT on, will say solar project, 1 megawatt, a huge project, a 1 megawatt, will nowadays it is costing only about 0.6 million US dollars, about 200 million rupees. Whereas hydro, it cost more than double. Right. Now anyway, both are renewable energy. When we put sales taxes on this, what will happen? The cost will go up by 18%. Then the investors will be reluctant to invest in Sri Lanka. Right. Now, as a result, I don't think this is a advisable thing what they have done. Right. Then the second thing I would like to talk about the employees' welfare. This is another sector which has badly affected this time. Now, lot of our factories, the manufacturing sector, they are providing food and transport facilities to their employees. Common food, common transport. A buffet meal. If you are a vegetarian, you can eat the vegetarian item. If you are a non-vegetarian, you can eat the other any item. Nobody can decide what is the value that particular person is consuming, right? But now these things were exempted from VAT. But unfortunately, recently they introduced VAT on those services. Now the company is giving these services to the employees free of charge. There's no collection, but there's a market value of that. On that market value, the company has to pay VAT 18% on that. There's no invoicing, nothing, but company has to pay VAT on that. It's a huge cost. Then what will happen is the employers will be reluctant to continue these services, badly affecting to the employees. Then brought forward inventories. Now, a lot of exempted items were made liable, especially in the sector of this supermarket sector. Definitely, the supermarket sector gross profit margin is not 18%, it's very much lesser than 18%. It's a volume business. Now, whatever the stocks what they had as at 1st January 2024 comprised with VAT exempted items as well as VAT liable item. On VAT liable item, they have to pay 3% more. Okay, manageable. But VAT exempted item made liable to VAT, they have to pay 18% on their own. They can't manage. What has happened? They have started returning the goods to the suppliers. These suppliers are small manufacturers, SME sector mainly. Then the suppliers, if they want to continue their business, they have to accept the return or they have to reduce the price, give a discount of 18%. What will happen to the SME? Right. Then when the retail market price, maximum retail price is marked, it's a problem. You can't increase the price immediately. Right. Then the import substitution materials. Now, when the SVAT system is in operation, while the SVAT system is in operation, when we are charging VAT on the local products, to get the SVAT registration, you have to have more than 50% export-related businesses. If you don't have, say, 50%, if you are not meeting 50%, you can't get SVAT suppliers, SVAT registration as a purchaser. Then what will happen with that? You will not be able to pass on the SVAT voucher to the next person. Then the buyer will be reluctant to buy these products because buyer has to advance more money on that. Therefore, ultimately these big manufacturing companies who are catering to the overseas market will move to import material under SVAT system because then they need not to advance money for VAT to the government. Right. Then requirement of the working capital. As a result of this, especially fuel filling station, now they have to advance 18%, not really 18%, it's about, because they increase the price by 4.8%. The VAT load in 18%, they removed the PAL by 7.5%, effective rate is about 8%, then the effect is only about 10%. Out of this 10%, they increase the price by almost about 5.8%. Now, anyway, these fuel stations, they have to advance money for VAT component, That's a huge problem for this fuel station because cost of finance is a matter. Now, still in Sri Lanka, the business loan, the interest rates is about 18%, 18%. Right. Then, increase direct and indirect taxes. Now, these are the major impact, overall impact, has violated the principle of fairness of tax. Now, there should be taxes which is fair to the consumers. I think we have gone beyond that limit. Why we have gone beyond that? Not only the weaknesses in the current government system, but also the weaknesses of the history. Because some governments, they used to lavishly give various tax exemptions without thinking about the economy of the country, survival of the country. Now, we are paying those things. Anyway, various corruptions are there, right? Various corruptions are there. Those are also affecting, we are paying for those corruptions, right? Then, cost of living, now people, the general public cost of living has gone up, savings has come down, their buying power has come down, ultimately the market demand has come down. Then, to whom you are manufacturing? It's a problem. Ultimately, gross domestic production is coming down. Then, the curtailment of capital investment, when the investment requirement is going up, or when you are not in a position to save money, you have to cut down the investment. Then, brain gain of the country. Sri Lanka is now education-wise, we are in a very high level. But now what's happening, a lot of our educated people who are capable of moving to another country, they are moving. Right. Then leaving out from higher education. Now we have faced this problem in this our practice. Finding proper trainees, especially boys, is not an easy task. Lot of people are giving up their higher education and moving to earn some money. Then I would like to put some special remarks and finish off my session. Now, in the administration, in our law, lot of words are there which are not interpreted properly. As an example, education is exempted. What's education? Whether it is only the primary education, secondary education, or graduate level education, or any other practical education. That's an issue. Then unprocessed agricultural produce. If you are selling a coconut, it is exempted. If you will peel it and if you will sell the coconut husk separately, whether it is liable or not. To me, it is liable, right? But definitely our authorities will argue that it is, to me it is exempted. But definitely our authorities will say it is liable. There's an ambiguity on those things. Right. Then doubt of reach in government budget. Yes, government expected a fairly big amount out of this money, the taxes, to meet the IMF requirements as well as for the future of the government. But when the buying power comes down, whether the government is in a position to cover up all these things. Then not attempt to remove tax administration weaknesses. In these amendments, there aren't any major effort to minimize the administration issues. Right. With that, ultimately, what will happen when we are managing the cost of a product or cost of an entity, we have to think, mainly we have to think about the tax. In Sri Lanka, we have to think about the tax. If we will forget about the tax, our costing won't work properly. Yeah, saying that, I would like to thank you, everybody. Thank you.
Now to deliver the token of appreciation, I invite Professor Lakshmanar, whatever the President of CMA Sri Lanka, to hand over the token of appreciations. May I now invite Mr. Heshan Kuropu, the President of Institute of Chartered Accountants of Sri Lanka, and the President of South Asian Federation of Accountants, SAFA. And also Mr. Niraj Joshi, CMA. And Mr. Shanta Niriala, the Chairman of the Consumer Affairs Authority. And Mr. Atula Ranavira, the Managing Director, Asset Advisory Private Trust, and also the Managing Partner of the Ranavira Associates Chartered Accountants. So with that, we'll have a 20 minutes break. Now we invite you for tea. So after that, you can return after 20 minutes. This tea served outside.